Many insurance companies face practical challenges, which may expose them to even greater tax challenges. I'm sure you know one of the practical challenges for insurance companies is reconciliation of revenue. With that being said, hi everyone. We would like to welcome you all to our podcast series, Everything Tax by Anderson UAE. Everything Tax is an initiative to share our knowledge with everyone. I am Rishi Sundaram, Senior Associate with Anderson UAE, and along with me we have Gaurav Chugani, who is a tax manager. It is a pleasure to have you here, Gaurav.
Thank you. It's a pleasure to be here with you. So today we are here to discuss about the most complex, or you might say the most significant operation in the UAE, that is insurance. Across the globe, we have seen that people take insurances for their life, maybe for their car, their buildings, their assets. It's just a means to sort of mitigate the risk of uncertainty. So we have seen there are a lot of insurance companies across the globe. They provide support across the globe. The insurances are covered across the globe. Though that's a different nature of insurance. So it's always embedded in a person that they want insurance. And this is a sort of a necessity, if you ask me. We've seen that from a VAT perspective, it's very easy peasy that its insurance is standard rated and life is only exempt. It's very simple, it looks like. But it is very complex because the transaction which is there in the insurance is a bit complex. Because there are flow of services, there are sort of claims, then there are sort of services which are there at each leg. So it makes it a bit complex, and you know, because you're from an insurance background and you have done a lot of insurance company back in Oman, as well as your family, there are people who are working in insurance companies, so understand the industry. So would you like to add on certain critical aspects from an insurance perspective?
Absolutely, Gaurav. One of the primary aspects of insurance operations that must be put under the microscope is the agreements between insurance companies and brokers. Brokers charge a commission to the insurance companies based on the agreement in place between the parties to sell their products. Now, ideally, the brokers would issue a tax invoice for the commission, given that it's a standard rated transaction. However, we see often that due to practical challenges and high volume of transactions, the parties opt into a self-billing agreement wherein insurance companies issue an invoice on behalf of the brokers.
Correct.
Consequently, we have commonly observed that there tends to be major discrepancies in the reconciliation of the output tax on the commission by the broker as compared to the input tax claimed by the insurance company. And this is a major point of discussion because ideally the flow of the output tax and input tax should be in parity with the UAE VAT legislation. So what do you think of that?
Agreed. So basically what I see is that the broker or the commission agents which are there for insurance are belonging to an unorganized sector.
Yeah.
So once they come from an unorganized sector, their books of accounts are not that clean. Of course, there are exceptions.
Yeah.
But so it's like that. So in that case, what happens is that a self-billing agreement comes into play, wherein the insurance company takes the onus of issuing tax invoice on behalf of the brokers. And what happens in turn, the brokers are responsible for the invoices which are issued by the insurance companies. So they have various self-billing agreements with various insurance companies. But what happens is that practically we have seen they report a different figure as compared to the invoices issued by the insurance company, which entails one problem, that is the insurance company claims the input tax based on the invoices issued by them, but on the other hand, if you see, the brokers have reported a different sort of a number in their output tax. So there is a sort of a parity mistake, or maybe there's not parity in this reconciliation. But of course, the FTA has highlighted this point because most of the insurance companies are under audit right now, and the FTA has highlighted this point for most of the insurance players and brokers. Now, as a practice, we have also started seeing that many companies are making this mistake. So while we are reviewing the returns, we highlight the invoices which have such discrepancies and we disallow the credit. Maybe we postponed it to a next period, or maybe this is claimed in a subsequent tax period. So this disparity is there, and the impact for this disparity could be far-reaching.
Wow, that's actually a really great point, Gaurav. And while we're on the subject of reconciliation, it is noteworthy to also discuss the revenue reconciliation of the companies, where it's a practical challenge as well as far-reaching tax challenge. Given the complexity of the concepts such as your earned revenue, your unearned revenue, your EPR, so on and so forth, and also given the recent introduction of IFRS 17 on insurance contracts. Insurance companies are required to abide by revenue recognition as per the updated standard. And consequently, you get a scenario where you have revenue as per your books, which is following an IFRS method, and then you have your tax reconciliations revenue, which is based on, of course, the date of supply rules as per the UAE VAT legislation. So you get major discrepancies there. And, from an audit perspective, we've also seen that a reconciliation of revenue between the books of accounts and your tax returns is needed so that you can ensure your taxable revenue reported is in parity with your financial statement. And I always like to say reconning is always better than a reckoning for the sake of a company's life. Wouldn't you agree, Gaurav?
Of course. Like, one of the differential aspect which I see is that the life insurance. It seems very simple. Life insurance is exempt. But on the other hand, there's another reconciliation which is required, is reconciling the inputs. You cannot claim the input tax credit for all the expenses which you have incurred for providing the life insurance service. So, as a general rule, we try to classify the input tax credit into input tax related to taxable supplies, that is general insurance, health insurance, or other insurances. Then we bifurcate into the second category, which is input tax related to life insurance or maybe exempt supplies. And the third one being the common one, the common expenses or the common input tax. Then we bifurcate the common based on the exempt and taxable. Okay, there's a method which is there. There's the common practice as per the UAE VAT law. Then what we see is that most of the companies, insurance companies, use that method only. That is the general method. But we have seen that few companies only have applied for a special method. None of the companies have applied for a special method, or they have a approved method to claim input tax credit, which entails that there is something which is missing. And we have seen that 100% of the input tax has been claimed by insurance companies on the common input, which is not the correct approach, if you ask me.
Yeah.
So there is a sort of a, what you might say, element of mistake or sort of something which is missing out. But to be very honest with you, insurance companies have been told by the auditors during audit, and this thing is being noted by the FTA. And I think people should start taking a stand for the life insurance part as well.
Wow, that is an absolutely noteworthy point, Gaurav. It seems that the insurance companies need to be wary about many aspects from a compliance perspective.
Correct.
And companies need to keep in mind all these compliances because, as you rightly mentioned, we've seen that majority of the insurance companies now are under audit from the FTA for prior periods. I'd like to share some examples of a few critical observations that we've seen from audits. One being, again, the broker's invoices. So with broker and insurance company transactions, we've seen, through our experience in VAT returns, the quantum of the transactions are really substantial.
Of course.
And if you think about it from an audit perspective, the first thing they go, what's your biggest input tax? So it's important that these insurance companies ensure that the format as well availability of the tax invoice is compliant to ensure that they're claiming it on the right basis.
Precisely.
A second thing, a very interesting one, through our experience, we've seen a couple of insurance companies. They provide insurance services to their employees without any charge, free of cost. Now, this one is a little bit of a hot one because we've seen through our experience that the FTA's view on this is definitely it would fall under the ambit of a deemed supply.
Of course.
So
Yes.
I think insurance companies really need to be on the lookout for any services provided to employees or other personnel provided free of charge. Because if deemed supply is applicable, then VAT should be charged on that.
Correct.
Yeah. And the third thing we've always seen is the FTA usually has a tendency to deep dive into the inaugural tax period. Transitional provisions. You have your insurance contracts that spill over into the VAT regime from before and after, and kind of the FTA checks that you've complied with all the provisions of the transitional provisions and reported it correctly in the VAT return. And I think the irony is not lost in saying that the industry that specializes in mitigating risk for others needs to mitigate their own risk. And what's needed, the need of the hour right now for insurance companies is definitely to prepare, to reconcile, to gear up for audits and rectification of the past, be compliant.
So I totally agree. And what I personally feel is that the IT infrastructure for insurance companies are one which they are dependent on. Now we have seen that while audits, that their insurance companies are not able to retrieve the informations. So what we suggest is that they should start preparing for audit files. If the audit files are ready, then 99% of their issues are solved. So that is what I personally feel. Thank you, Rishi, for your insights about the insurance sector. I can see that you have a deep knowledge about insurance. And I'm Gaurav Chugani. We're signing off for now. Please be in touch with us for more informative podcasts on everything tax by Anderson UAE.